Hi everyone, today we are here to talk about smart tax planning. What is tax planning? So tax planning is a part of your personal finances where it comes to looking at your financial planning to make sure that the taxes you pay are actually optimized. Well, as Malaysians, I'm sure you want to be paying taxes, supporting the nation, at the same time to actually be smart about your tax planning to just pay the amount that you should be paying and really reducing your personal tax liability. So I'm Steven. I'm a financial coach with Naluri and a licensed financial planner with Vantage Advisory. And my personal goal and mission in life is to help people simplify and grow, especially in personal finances. So today, there are 3 learning objectives that we will hope to cover. First is so that you understand what are the tax exemptions that are actually available for you, to know the difference between tax avoidance and tax planning, and how to maximize your deductions and apply your tax savings for maximum efficiency. Let's start with a little bit of introduction. What is taxation? So a taxation is basically a compulsory payment to the government. So this can be done in terms of your individual income, which is our main focus for today. It can be in terms of business profit. It can be in terms of your goods and services. So all these taxes that are collected are then used to run the country, whether it's education, public healthcare, or public roads and other public services. There's a quote that can be said that there's certain things that you really can't avoid that's inevitable, and this includes death, taxes, and inflation. What is tax planning? So what we need to be looking at is how can we reduce the tax payment to the minimum amount that you can do legally. What are the tax deductions available? What exemptions are available for the income that you earn? And is there any need for any deferment of tax payment done in a legal manner? So tax planning needs to be done before the end of any financial year. So for example, this year's year assessment 2021, which we are filing in 2022. So this includes all your income, all your tax relief from January 1st, 2021 until December 31st, 2021. So it is too late to actually wait until the time it comes for filing taxes to prepare that. So it's good to get prepared in advance. If you're a first-time filer for your taxes, what you need to do is that you need to register with the tax authorities or Lembaga Hasil Dalam Negeri. So this can be done online at edaftar.hasil.gov.my or at any LHDN branch. You will then receive your income tax number, and you'll also be given a OTP, a one-time PIN to register for your first-time login to Easy Hasil. And once you do that, then you'll be able to select your type of filing. Typically, if you're an individual who is an employee, you'll be filing under Borang BE or the BE form for your filing. Deadlines to take note of. So for resident individuals, as mentioned BE earlier, who do not carry on business, your deadline is at 30th April. If you carry on business, that deadline is a little bit longer at 30th June. And there's also an additional 15 days if you actually file your taxes online. So for example, if you're filing as Borang BE form, the deadline from 30th April is then extended to 15th May with the easy filing period. So a thing to note as well is what qualifies as a resident individual. So a resident individual means that you are in Malaysia and earning income for at least more than 50% of the year. Let's move into our first section, all about understanding income and what is chargeable from a tax perspective. Do you know how many sources of taxable income do you have? Just take a moment and think, how many different sources of taxable income do you think that you have? Got it? Now let's examine each one of these sources of income and see how many of these do you have. So for most of us, you would have income either through if you're self-employed or you're running a business owner from your business or your profession. For example, if you're a lawyer, etc., or a doctor. Otherwise, it will be employment income that's actually paid from your employer. There's also dividend income that gets paid in from your various investments, interest that you get from your savings in bank accounts, fixed deposits, etc. Any discounts that you may be getting as well, for example, given by your employer. Rent collected, so rental income is chargeable income in Malaysia as well. There can also be things such as royalties as well. So royalties would be, for example, if you wrote a book or you're a great singer, you wrote a hit song and you're actually collecting income from that. They can also include various things as well. It includes pensions, once you're retired, premiums, annuities, perquisites that are given to you as well. So we have looked a little bit about the chargeable taxable income that comes in. Next, let's go into income tax exemptions as part of smart tax planning. So firstly, we will be focusing more on tax exemption for employment, as that affects the larger majority of Malaysians. So if you're actually getting leave passage, that means your employer actually gives leave passage, whether locally up to 3 times or up to 3,000 overseas. So even though there's a benefit given to you, that's actually tax exempted. Medical, dental, childcare, various employee benefits that are given to you. And now it even includes maternity as well as traditional medicine. So all these are exempted as well as an employee. Pension and gratuity. So it is actually 100% tax-free, totally tax-free after the age of 55, provided you've been working for at least 10 years in the same company or group, or if you actually need to leave due to ill health, then the pension gratuity payments that you receive will be fully tax exempted. Loss of employment has also been increased as well. So it has been increased to 20,000 per year of service. So for example, for loss of employment, if you receive, say, 200,000 ringgit and you've been working for 10 years, so 20,000 times 10 years, you will get the full 200,000 exempted for loss of employment income given to you. Scholarships. So scholarships given by your employer are 100% tax-free as well. It does not have to be related to your work directly, but it is actually fully given to you and you don't have to pay taxation for it. And in the last couple of years as well, as we have been working from home, so any gifts in the form of a handphone, notebook, tablet, laptop, up to 5,000 ringgit, that is also tax exempted. Next, let's move into tax exemption for investments and overseas income. So for interest and dividends for a personal individual, whether it's from your banks, tabung haji, unit trust investments, overseas investment income, it is right now tax exempted on the Malaysia side. One thing to note upcoming is foreign source income, which by right was supposed to start on January 1st, 2022, but it has since been deferred until January 1st, 2027. So foreign source income actually affects if you have any form of income being remitted into Malaysia. So basically what it looks like is at the point when it enters Malaysia, and if you have actually not paid taxes or the amount of taxes you paid overseas is lesser than what you will pay in Malaysia, then it will be tax coming in. So while it does not affect for your year assessment 2021, it's something that you would need to take note of, especially if you have any sources of income coming in from overseas that you might be planning to bring back at a later point in time. There would also be other forms of tax exemption. So for royalties, cultural performances, if you do any expert services that our government view as an expert service, then you'll be exempted up to a certain limit, which ranges from 10, 20 to 30,000 ringgit, depending on the type of service or royalty. Inheritance and windfall is also currently 100% tax-free. So while there are talks of making it applicable for inheritance tax, right now, everything that you get would be actually 100% tax-free. Do note that there would still be some other fees that may be applicable as well. For example, if you inherit the property, there would still be property transfer fees, legal fees, and stamp duty. So although not directly taxable, you would have to take note of any of these expenses that may affect your inheritance income coming in as well. Let's move into the next section, all about income tax relief. And we have a number of changes that have been happening for the year of assessment 2021. So let's get right to it. So just as a quick overview, what is tax relief? So what happens is that when you're actually filing your taxes, you'll be then looking at, okay, these are all your various sources of income. And after that, you can then be looking at these are the various applicable tax relief to basically reduce what will be taken down as your chargeable income. And this regularly changes as well. Every year, the Prime Minister of Malaysia will be announcing in the nation's budget some of the changes as well. And a full list would typically be available on their tax authorities LHDN website for full details, which you can then check out to understand the terms and conditions. Tax relief for self, your wife, as well as for alimony payments. So for individual and dependents, there's a standard 9,000 ringgit tax relief. For spouse or payment of alimony, there's an additional 4,000 ringgit in tax relief a year. If you're a disabled individual, that's 6,000 ringgit tax relief. If your spouse is disabled, this has been increased as well to now 5,000 ringgit for a disabled spouse. Next, on the parent side, medical treatment has also increased as well. Now it's from 5,000 ringgit to 8,000 ringgit. So this includes special needs, carers expenses, includes going to a nursing home for disposable diapers, etc. As long as it is actually certified by a medical practitioner that your parent actually needs this. So for this, your parent also needs to be residing in Malaysia and receiving this medical treatment in Malaysia. There used to be a previous category where if you did not claim for parents' medical treatment of 1,500 ringgit for father and 1,500 ringgit for mother, but this has since been removed for the year of assessment 2021. Next tax relief will be focusing on education and children related. So if you are pursuing tertiary education, you actually get tax relief of up to 7,000 ringgit. If you have children, you actually get to claim tax relief if you actually put into Scheme Simpanan Pendidikan Nasional, the National Education Savings Scheme, under SSPM Prime of up to 8,000 ringgit. And this can be claimed no matter how many children that you have, as long as your child is age 18 below. It also can be claimed by both spouses as well. So for example, if you have a child, both yourself and your spouse can both claim for the 8,000 SSPM Prime tax relief. If you have unmarried children below the age of 18, there would also be a tax relief as well. If they're actually under the age of 18, or if they're above the age of 18 but they're studying full-time. And the exemption is higher as well if your child is actually disabled. We also will look at other exemptions as well. So for example, breastfeeding equipment. So there will be tax relief for breastfeeding equipment. So this includes not just the pump itself, it will also include like carrier bags, etc. And this can be claimed once every 2 years. For childcare, kindergarten, for children aged 6 and below, you can claim tax relief as well. Do note that this must be at a registered childcare or kindergarten center. So do make sure that the center that you're sending your child is actually registered in order to qualify for the tax relief. Next, let's move into contributions as well as insurance and takaful. So for contributions, you get to have tax relief of up to 4,000 ringgit in EPF. This would be for your employee contribution portion, so it does not include the employer contribution portion. For private retirement scheme or deferred annuity, there's a 3,000 ringgit tax relief that you get in a year. For social security, SOCSO, or otherwise known as under Perkeso, you will get tax relief of up to 250 ringgit. Do note though that if you're actually an employee and the contributions are being done through your salary, the maximum amount for SOCSO for tax relief is actually 237 ringgit. On the insurance and takaful side, for life insurance, you would actually get tax relief of up to 3,000 ringgit. But if you're a public servant with pension, that means you don't have the EPF 4,000 deduction on the left, then this amount for life insurance is then bumped up to 7,000 ringgit. There'll be another category as well for education or medical insurance, which is for 3,000 ringgit. So do note that this tax relief that you get for insurance is not exactly the amount that you pay in your premiums for your insurance. So what you need to be doing is to actually get the statement of your premium payments. So there'll be an annual statement that you can actually get from your insurance portal. And you can then see under which category this tax relief is for each of your premium payments. So some of it might fall under a singular category, for example, under life insurance premiums. So you can put that 100% towards the life insurance tax relief, but some might fall under a separate category. For example, it states as life/medical insurance. So for this, you can either claim for it under 100% under life insurance or only 60% under the medical insurance side. So you would want to calculate it out, or you can actually check out various calculators as well that's available online. That would help you to calculate out just to make sure that you maximize your tax relief on the insurance or takaful part. And in our final area for tax relief, serious diseases fertility treatment has been increased from 6,000 ringgit to 8,000 ringgit. So this would include various dread diseases that may affect you. There would be two subcategories within these serious diseases and fertility treatments. So one is actually for medical examination, and now it also includes for vaccination as well. So this has been increased from 500 ringgit in 2020 to 1,000 ringgit in 2021. Do note though that for this medical examination, it must actually be approved for tax relief. So this would typically include for a full medical examination. So if you did a medical examination or you plan to go for one this coming year, do check to make sure whether it does qualify for the tax relief. For the vaccination, you can also claim it under the medical examination/vaccination area of up to 1,000 ringgit. And it not only covers COVID, it also covers, for example, your spouse, your child, or even other vaccination like pneumococcal for your child, or even the flu vaccination as well. Another new subcategory will be for COVID-19 testing/vaccination. So this can be for either COVID specific vaccination or for any testing that you did for COVID purposes which you paid for. So this may include, for example, rapid test kits, any PCR kits. So do make sure that you keep those receipts and submit it for your tax relief. Another category as well will be for disability. So whether it's for yourself, your spouse, your parent, or your child. And so for any basic supporting equipment that you purchase, for example, a wheelchair, you can actually get tax relief for medical expenses up to 6,000 ringgit. Another relatively new category will be for local travel. So accommodations, tourist attractions, cuti Malaysia. So if you actually did any staycations, did any local traveling, you get to claim tax relief of up to 1,000 ringgit. Next, let's move on to the final parts on lifestyle tax relief. So we still have our lifestyle tax relief of 2,500 ringgit. So this will be for things like books, internet, going to the gym, etc. There's also a special tax relief that was introduced in 2020 and is still available in 2021. So this will be for purchase of smartphone, tablet, or personal computer. And the categories can be combined as well. So for example, if you bought a laptop that say costs 5,000 ringgit, you can actually claim it 2,500 under lifestyle and the remaining 2,000 ringgit under the special tax relief. There is a new category as well for sports lifestyle. So this will be 500 ringgit. So this would include, for example, if you join a marathon, if you paid for booking at a badminton or tennis court, so you will also get this special sports lifestyle tax relief as well. A note as well for under the lifestyle category, it also includes for sports related equipment as well, but do note that it does not include for attire. So what this means is that you can claim for things like a badminton racket or a bicycle, but you cannot claim for things like sports shoes or sportswear or clothes. Next, let's move on to income tax rebates and deductions which may be applicable as well. So if you're an individual and your total chargeable income is less than 35,000 ringgit, there's an additional tax rebate of 400 ringgit. If you and your wife are actually filing your taxes jointly, then the rebate is basically doubled to 800 ringgit. A question we often get is that should you and your spouse file your income separately or jointly together? And the answer to that is that it depends. So for example, if your spouse is actually not earning income, for example, is a homemaker or doesn't have chargeable income in Malaysia, then it may make sense to actually file jointly. But if your spouse is actually chargeable for tax relief, it may make sense to actually file separately, because then both you and your spouse would then be able to have all the various tax relief applicable for each one of you, which would reduce your overall tax bill as well. Tax rebates would also include if you have any payments, for example, zakat or other payments. So this rebated amount will be deducted from the taxable amount. Do note that if you overpay higher than the tax amount, for example, for zakat, unfortunately, it's not refundable. So you would want to check how much would be the optimum amount that you'll be paying for your zakat. Tax deductions also help to reduce your chargeable income. So most of the tax deductions are from gifts and donations to a government-approved charity or organization or directly to the government. And as always, you must keep receipts both for this and, for all the various tax relief as well. You would want to be keeping your receipts for those. So these are some of the allowable tax deductions as well. So gifts of money or in kind, artifacts, manuscripts, paintings, etc. Gift of money for library facilities, medical equipment to the National Art Gallery, etc. So overall, these are our 8 essential tax tips to kind of wrap this smart tax planning section out. So the first is really to get organized. So don't wait until the last minute to scramble to get all your tax relief. Make sure that you keep all your receipts. And nowadays as well, with a lot of physical receipts that you get, they may fade after a period of time. So you may actually want to scan or take a photo of them and make sure it's all organized. Tip number 2, go through all the various tax relief. Just check through one by one, make sure whether any of this would be applicable for you, and then you can include that. Similarly as well, for your various tax rebates, make sure you maximize that. Number 4, avoid penalties and interest. So do file within the deadline. If for whatever reason, if you do not have the capability to make the full payment or the amount is too large, what you can actually do is that you have a couple of options. One is actually from LHDN website itself. At the point of paying taxation, there are certain credit cards which should actually give you an installment payment plan so you don't have to pay one shot, but you can actually split it over a number of months. Another alternative is to actually reach out to our tax authorities and inform them of the scenario, and most of the time they would be able to discuss and work out with you on a repayment plan itself. Number 5, maximize your various tax deductions. So if any tax deductions, make sure it's included. Tip number 6, before you hit the final button, go ahead and proofread your returns. So you can even save a draft just to check it through, make sure it's all done before you submit. Tip number 7 is file electronically. So it's easier to fill up. It's typically saves time as well, and you get a 15-day extension for your tax filing. And last but not least, talk to a financial expert if you have any queries regarding your taxation. So these are the learning outcome. So let's go through this, and hopefully we have achieved this. So to look at what will be the difference between tax evasion and tax planning, to identify what are the allowable tax exemptions, like tax relief you can use to reduce the amount of tax payable, that you're able to maximize your deductions, and that you're prepared during this tax filing time. And of course, to apply it practically when you actually do your tax filing. Thank you so much for being part of our Smart Tax Planning session, and I look forward to talking to you soon.